against it. And I think it just moved against it. Oh, and there goes the Euro USD. Now, again, we're not talking about trading two trades at once. But what I'm showing you right now is that there is a potential to be able to do so, but there's also a okay, either way, could have got out of 18 bucks. But I wanted to show you what it looks like when you're on the method behind choosing the trades that we're choosing. One being an ATM, one being a ITM trade process of price level. Okay, so here's the USD JPY. You would simply move this over closer to the end. We're looking for this height right here, 114.10. USD JPY, 114.10. We'll do 114.11. Jump right there.
Yeah, screen max.
This will be... Okay, hang on one second.
Mm-hmm. That was Brad Beckham.
Okay. Right there, 114.10. 14.10 is the order. And right there.
I was going to say, did you win that last trade?
No.
Ah.
Yeah, the Audi USD lost.
But the other one won.
That's the one. Oh, wait, it's the, no, they both lost.
Oh.
We're not, yeah.
No, it's news time. You're not trading. You're not allowed to trade.
No. Oh, it's news time. That's right. Okay. That's fine. But I want to show you the mentality of getting, even though that this is not about the result of the trade, it's about the method to choose when you're choosing the trade. Okay. So that's basically what this is. If you're just joining us, we're in pre-webinar kind of stature of talking about the process. So let's dissect each one. Okay. If you're going to be using price level is going to be the method of finding the next level to be able to, where in the opposite direction is going. Now, first off, establish trend. Which way is the trend going on this 1 minute? Can anybody tell me? Mike, which way is the trend going?
Down.
Okay. So if we have a down going trend, your down arrows, your first down arrow has more of a potential to do what? Follow the arrow, right? Mm-hmm. Have you ever noticed this? Why is it like 1 and 2 and then 1 and 2 and then 1 and 2 and 1 and 2? Seeing the pattern? Great. So if you see the pattern now, the first one that usually comes on in a down trend is what? Bada bing, usually the winner, right? The next one is sometimes, most of the time, usually a winner as well. But you just have to kind of get the rhythm down. And that's what it really is, about getting the rhythm of the process.
And that's like we've been talking about, guys. I'm sorry. Like we've been talking about, guys, once you see that pattern and you only need 2 or 3 trades at the incremental crawl at 5 contracts, there's 3 right there, and you 15 minutes later you're out, and that's it for you for the day.
Right.
Exactly what we're trying to strive for. Eventually.
So this is news is happening right now. So this is not a standard way that the 1 minute charts would look in a non-news process, because you're going to get a lot of movement. It's going to be a lot of broken arrows, all that kind of stuff. But I want to show you the mentality of it. It's like say something on here on the USD JPY. You get a lot of same size arrows. It's not following a consistent pattern. This is what they call as a ranged market at this particular time. Give yourself a couple of minutes to where you start seeing, the arrows happening again. You see, like, this is a range time, right? There's not a lot of movement. And all of a sudden, some super movement comes out, right? This is there's only about, what, 20, 30 minutes worth of time frame we're talking here. 1630, about an hour's worth of time completely here. So you can kind of see as it started to go back into getting close again, these big bars started happening again. If you start noticing this trend, maybe there's not a lot of movement or what have you, you might want to look at staying out of the market at that point. But again, this is up to you. This is up to your provision of trading and learning how to trade. Oh, and could it? Now it'll stay at 10.9. There it is. 11. Now if it stays 11.0, we're going to lose. No, we're going to win. We're going to win. But if it bring up, there it goes. It just broke it. But either way, this is a news trade. So this wasn't actually about getting. So this is still, now that's a win. This could be still a win. 14 seconds. Now it's a loss. This is the point where I don't like watching the trades at all from the side, especially in the 5 minutes. You see, and there's a loss. But again, this is trading news, and we don't normally trade. We don't trade the news at all. Okay. Now, again, last one I'm just going to show you real quick. This one is a range market, so I'm not worried about. This one has a nice, good flow on it, right? But every once in a while, when you have a nice, good flow of something like this, okay, if you get 2 or 3 bars in a row that are red, you got some distance. Here's a common practice for you for price level trading. Come back about 3/4 of the way, okay, because usually a retracement happens about halfway through this, right? It's going to try to come back up about halfway and keep following the market. So you can come into about halfway or the biggest bar at the end of the biggest bar, so 22.72. And you'll see here 22.73, okay? So this is something that could have a good effect for us to come in here, do that, and you hit 30 and you enter. And
Max,
thank you very much. Yes.
Max, it's 7 o'clock.
Okay, hang on. All right. Okay, so you guys got the feeling of that, right? You got the pace of that.
Awesome.
All right, so give me a second here. We got the recording going. We'll get restarted here in a moment. All right, everybody. My name is Max Farrow. This is Dex. This is the 5-minute MDM, MT4, and WB webinar, price level and ATM trading. I'm joined with our special host of the mostest, I guess, Mike Ficca.
Hey, Max, how are you? And before we start, I would like to congratulate, and he doesn't know this yet, Tim H. for making senior. So congratulations, Tim. Thank you for all your hard work. We definitely appreciate it.
Get sound effects. We got to get sound effects. Gotta get some sound effects in this thing. Yeah, Tim H., you have exuded the professionalism we really do appreciate. You are a monster trader, a wonderful, disciplined trader. Can't wait to see the success from your side. If you have not had a chance to witness some of Tim H.'s trades, please go now and have a look at the journal that's inside the system in there. Let me see if I can get over to it real quick, and I want to show you the excellence of this individual. Did I put it over? I did put it over. Okay. Right here in the journal, Tim H. Beautiful numbers, even at 79.52%, still has a high profit margin. And the reason why is that this is a strategy of following a discipline of beating the drawdown, right? And that's what this really is, about beating the drawdown. I'm going to scroll down really fast, just get through this real quick. Here's Tim H's, this is 2 days ago, okay? So I'm just going to go here through and show you. So I'm going to select here and here, and I can see down here $323.50. He's got 17 and 5, so about 22 trades. 17 and 5 comes out to be 17, 22, about 77.2% success. Now, why is that so cool? It's because in one day he made $323 using one contract. How do you turn that to 640? Anybody? Anybody?
CVG.
Yeah, right, CVG. Rick, if you need to expand your screen, just simply go up to this top right-hand corner and it'll expando. Okay. That'll get you handed onto your screen up here, this little corner up here. That should really take you up there. But there is volume. There's no volume. Mike, can you hear me?
No. Volume was Joe Duncan. That's the V of CVG.
Oh. All right. So there you go.
He answered your question.
Yes, volume. That's right. Just so you know, real quickly, earnings and risk disclaimer. Thanks a lot, Brad. Education and trade assistance only, and all results may vary. Pause the video, pause your eyeballs, have a look at this. Remember, everything's got risk. We're here to try to help you as much as possible, not steal your money, not make you lose, not trick you into buying binaries or do any other bullshit like that. We're really here to teach you and to give you as much experience as possible. Okay, so, but to get the experience, you got to do a lot of the work, and a lot of the work takes risk. So just keep that in mind, okay? All right, so today's topics. What are we going to talk about? We're going to talk about price level trading today. This is not really about the sales video. Is anybody here that's new that hasn't bought in? Anybody? Bueller? Brand new people haven't bought in? Anybody? No? Okay. So basically everybody that's here, what's that?
Abe Froman, the Sausage King of Chicago.
Mm-hmm.
It's from the same movie, Max. You're killing me.
Right. Yeah, I know. I'm distracted. Today's been a very busy day and a weird day today. All right, so we have you guys still okay. We have a couple of things happening with the network right now here on the site. So I'm trying to deal with that as well. But today is really about tonight's webinar is really about price level trading, ATM trading, learning about the big sell, right? Because we're going to be talking about being able to utilize what side of the process that you begins to follow the most, right? Whether it's the sell side or it's the buy side or what have you. It's all a matter of your interpretation of how well it works for you. And of course, learning. That's one of the biggest things is teaching yourself how to learn the system. And that's by getting in there and doing. And we're going to talk about some of that tonight. Okay. Price level trading. The idea, sorry, this was not supposed to either. The idea of price level trading is a personal vision of what the market looks like at any one given moment, right? We all know that the easiest thing to use in trading is a simple chart, right? Has anybody ever seen any of the price action information that I've told people about? Maybe you've been witness to one of the webinars. Let me pull up an actual charting network here. Go here and go here. Everybody knows that this is let me expand this out here. Okay, you all see my chart right now. This is a simple chart. It has no indicators on it. It has no lines drawn on it. It has only the availability to scroll back and forth and scroll in and out, right? We can change the time frame. We can change the perception of time within this process, but it really doesn't have any other indication in there, right? The only indication that it has are two little things that are planted right in your face, right on either side of your nose, and that's your eyes. And it uses the massive indicator, that's your brain, okay? And you begin to see relationships the moment you look at this chart, right? When you start trading enough, you start seeing relationships all over the place, right? This is a high, and this is a low. That's a relationship you see immediately, okay? You then can find other relationships by simply housing another line. This is a high, and if you go all the way over here, look at that. How come that relationship happened? Well, that's not the only time that relationships happen. It's happened there, it's happened there, it's happened a little bit of few here. Up, there it is again, up, there it is again. So that line begins to tell you that, hey, how far back can this nonsense go? It just keeps going. There's another one, there's another one, there's another one. You see what I'm saying? So the relationship is never just about one single event. It's about multiple events. And why does it do that? Why does it come up here, dance around and shoot back down, dance around, shoot back up, and pierce through, hit another level, go back up? It's because each one of these levels is a buy-sell area, support and resistance. Support and resistance. If you don't know what support and resistance is that when the price is below the line, this is considered resistance. When this price is above the line is then considered support, right? Overbought, oversold. too many selling off, and now people need to buy, so they're going to support the process. Too many have been bought, so now they need to get rid of it, so they need to resist the factor of buying. Easy way to know, okay? So following this process of, being able to see these systems without the lines, objects list, install, delete, and delete. So once you're able to see that relationship, whether or not it's on a 30-minute, a 15-minute, or a 5-minute, or even a 1-minute, it's easy enough to start to find the relationship with the price itself that's on Nadex as well. One of the big things that when you're looking at the pricing on Nadex is to know the difference between indicative and, of course, the spot Forex price that's here. Usually about 1.5 to 2 pips above whatever the spot Forex price is. Okay, it's something that they use to be able to keep swing trading from happening and some whiplashing happening. So just keep that in mind. Another relative term to be looking at when you're trading with a little bit of understanding of support and resistance now and price action is the movement of the candles and how they affect the time that they're in, depending on the time that they're in. They all move the same. There's an up, there's a down, there's an open, there's a close, there's a high, there's a low, there's a win, there's a loss, right? They all have a battle that they tell. They all tell a story. And if you look really closely, the story can scream at you, right? If you look at this line, if you look at this bar right here, okay, who won this battle? Mike, can you tell me who won? The bulls or the bears?
The selling people.
The sellers, the bears, they won. And there's a lot of battle that happens in there, right? Who won this bar?
The buyers.
The buyers did, but was it a close race?
Yes, very.
Okay, very close. Another very close race. And the more close races go, the blitzkrieg's happening, whatever's happening, there's a little bit of revolt, so then it happens again, and they're like, no! And then there's some even action, right? Usually with even action, there's just a little bit of movement in the opposite direction, right? Usually when you get a double moving bar like this, there's about a move, they call it railroad tracks, they call it raceways, they call it tire tracks, whatever you're going to call it, doesn't really matter at this point. These are considered events. Candles, the Japanese candles, right, all have their own story to tell. So you can begin to see the relationships with the factors of seeing support and resistance, seeing the candlestick movements and how they move and how they operate. We can easily see a relationship that with every impulsive move, every mass movement, 1 or 2 bars that move a tremendous amount of distance, more than several bars combined, that there's an equal return, okay? So there is a impulsive move to a reactive move. Now, how far that reaction happens is usually set by certain terms and indicators, one being Fibonacci for retracement or other indicators that can tell you within a precision of a percentage how much that's going to come back, right? So as the market moves, how far is it going to come back into that massive bar movement, okay? So you have to keep that in mind, is that as bars begin to move, how far is this going to come back to get you, right? How far is it going to come back to close? You can see something like this little battle that happened here, right? You think of it as, where'd it go? Okay, this little war that, oh, did it again. Hang on one second. There it is. This little war that happened here, the bulls came in, took over, right? Had a little bit of a fight. Now, on a bar like this, when this bar is all the way down here, even though that the bulls won, they didn't win the entire time, did they? The bears were winning for a while, weren't they? Because this wick, this shadow, if the bears had not won at all or had been fighting very hard, this would be a very short wick on this side, very short. Right? It would look like something like this. Bears didn't have much of a chance here, did they? Right? Because it started off here. They really didn't take this down any further, and then the bulls had to fight back. There was no fight here at all. But here, there's a big fight. And this usually means something is happening. Okay, something big's going to happen. When there's a longer wick and a bigger battle about to happen, something big is about to happen. And what big happened here? We took a giant run, right? We begin to start seeing these relationships happening when you get these, what's referred to as dojis or spinning tops or shooting stars or inverted hammers or hammers, and all these great words and great names and all these little patterns happen. But you don't really get the sense of them happening consistently enough for you to spot because there's so many other factors in place. But you begin to learn, you begin to see these relationships as you begin to involve, man, there's so many things happening right now, it's not even crazy. There's so many things happening within a certain period of time that you may not see the relationships well enough until you really start to get in there. You won't see them your first or second time. You know, oh, I'm trading right now and I'm using candlesticks. This is only my third trade in and I'm kicking ass. Or you might say, hey, this is my fifth or sixth one and I've lost every single one. What am I doing wrong? When you get 400 or 500, that's when you have to start to assess, is this right for you or not right for you? But when you begin trading with this type of mentality, price trading, level trading, price action trading, this available will bring you more ease of use of being able to see what all the other indicators mean, right? Because when you combine them with other things, okay, when you combine them with the processes that are at hand, that's what you have to start. Like here, let me show you, and I'll show you with one that is so easy. It's not even anything serious, right? I invented this process called the double stow, and when I invented this process using the double stochastic, I done so because I found a relationship to happen in a certain period of time, and I wanted to be able to show that there is cause and effect to anything. You know, you see lines on a piece of paper, and they look something to one person, and to another they look different, right? So when I started to see the relationship with the support and resistance, and where the price action was moving, where everything was moving, I started to find a relationship with the stochastics as well. That once they came in and they all were facing, when all four were facing in the same direction, along with the trend or within the movement of a trend, right? That we had a very high rate of success in a 5-minute trade. I then found another relationship with the MACD and with a few other indicators. And I started to compile these all together into several different massive indicators. The full circle uses a trend reverse, where it notices weakening positions of different candlesticks, okay, to say that this is about to weaken. Remember what I said, it's going to spot relationships with candlesticks to spot a reversing trend or a reversing or a weakening trend, to say that this is going to, it's not going to completely reverse, but it's going to weaken enough to where it's going to dip back down, or it's going to go back up, okay? And it puts out a signal. That's what the full circle is. In our case here, with using the MT4 with the WB system, the MDM system, there are several different indicators that compile, one, the weakening of a trend, but also some other things that I don't want to tell you just yet, right? Because I don't want to complicate the value of what those arrows are. That's for the MetaTrader 4 version. For the WB version, we had to sort of take a few things out because we couldn't fit everything into this beautifully run box, right? We couldn't fit more into what this is. Why? Because it's web-based. And with web-based, there's a tremendous amount of information, right? Because you have to think, if you put MetaTrader 4 on your desktop, like I have right here, your computer system uses this information, and it's only you using it. Information flows in, it gathers the pricing, it grabs the market, it pushes all the information about the stows and whatever else that you have on it. With this system, every single one of you that visits it hits it 4 times as soon as you show up. You hit it 4 times. And then 5, 6, 7, and 8. That's 8 views with one person. So imagine when there's 100 people watching it. That's 800 views every single minute. So we had to be very careful. We had to be able to provide what is the most powerful indicator out of them all that gives us a little bit of confirmation, and to be able to provide the arrow. We created an event, a confirmation, and now we need to have a buying structure. And the buying structure is set in two forms. The first, price level trading. Price level trading is very easy. You just look at the chart. Very simple, right? This arrow just came out. What one am I going to go with? Price level dictates that. If this one just came out, you can either go back to the previous arrow height, okay, or a hill or a valley, depending on the direction, right? So a hill, a valley, right? Because it stands to reason as if this is to be coming down, it's going to be making lower lows, right? If this is all in one big trend going down. So it could come down, come back up, but it shouldn't break past this other low, right? So you could use this low, you could use this arrow, this low, or this high here. So there's three options to use. Whatever is safest for you at that point is then what you would choose. Price level trading is a preference of your particular time. I can't tell you which one to go after. I can only tell you that you have these choices to work with. And if you can see the relationship, folks, you will feel more comfortable with the process that you're trading with. Not just coming in, saying, there's the arrow, here's where the price is, let me go for ATM. Because ATM trading takes a little bit of a different model. Because when you're trading in price action, you're trading with these levels, right, that you're trying to hit and stay at. But in ATM, what you're hitting and what you're using is an arrow, money, and time. That's what you're using here. In ATM trading, at the money trading, you're going to the website of Nadex and you're choosing a number between 35 and 45. That's there. If one is there, okay, you can go for that particular price of between $35 and $45 profit. We're not talking, this would be on the sell side, of course. On the buy side, you would be at 65 to $55, right? But you're what this means that you're still about $45, $35 to $45 profit. And why is ATM trading profitable, even with a low success rate? Well, first off, you don't need a very high success rate to be a winner in it, do you?
Nope.
Okay. So simply enough, why is it a successful system? Because you can have a 79% success rate with ATM trading. Now, Tim H happens to be doing what we call a working order ATM trade. Okay. What he does is allows himself to go to the site, grabs I think it's either this one or the middle one or either one. And if he can't get to an ATM price, he will put a working order on for $68 on the buy side, or $38, or wait, no, 62 and 38 right. Yep. The two numbers. So what happens is that even if he does lose, he's only going to lose $68 or $62, right? If he wins, he's going to win $38. So all he really needs to do is win 2 trades back, and now, okay, because that's $76. Now he's in profit, right? In fact, he's $6 in profit. All right, is that right? No, $14 in profit. So that's pretty wild, right? It's like a 1.7, whatever it is, risk to reward. Now, this is powerful, but what do you need to be able to do to make this a successful trading strategy? Survive the drawdown, right? That's all you need to do, is survive the drawdown. Keep your head about you, trade discipline, trade consistent, trade the same exact way. Don't cheat it and put it on for 36. Don't try to rush in and, oh, well, it's at 32 this time. Let me grab it right now instead of put a working order on. Stay disciplined, right? Because disciplined traders do this. Disciplined traders, you see it a mile away. As soon as you get to it, It's like looking at clean sheets on a bed. It's beautiful. And Tim H., you've done a wonderful job. I don't know what you do for a living normally, but holy crap, you're very good at this. I'm very excited to have you with us. So you're beginning to see now that there's a relationship with everything. When you look at the chart, when you look at the charts, when you begin to use some of the process that you have, whether or not you're trading with a ATM trade, you're using the market price, you're using profit margins, you're using price level trading, it doesn't matter. As long, here's where we were with Tim. I had a thing for that already. But there is a process that you as a trader need to find. Now, can anybody here tell me, how do you find it? The last little part this evening. Can anybody tell me, how do you physically go find what works for you? Anybody in the room? Jim Frickson says practice. Corey Miller says practice. Thank you, Corey Miller. I appreciate that. She says practice. Get in and do it, Eddie says. Like that attitude. Over and over. Gee, I love that. That's awesome. Trade demo. Yes, Melvin D. Trade demo. Trade demo until your ears fall off. I don't care. Okay? You don't walk into a live practice, a live run of money until you got it to where you're sleeping it. You wake up and you're like, bye. Or you're doing whatever, right?
It's not far from the truth.
That's right.
Just trade in your sleep half the time.
That's right. I look at a chart and I see all the opportunities. A couple of things you can do, like she's referring to in the chat room, is set yourself a target per session, and that's good, okay? But sometimes what happens with some of us is that we all get stuck into that realm. Just one, you're like the little kid trying to get up from school. Mom, just 5 more minutes. I don't want to go to school today. You know, you don't want to quit trading. When you're on a roll, it's tough to set yourself a level. What I normally have to do is that green's mean to me, right? I love the color green. I hate red, but green is still mean to me because it still triggers a lot more into me than red does, right? Red scares me. It makes me not want to trade or not look. Green wants to make me, suck me in and make me part of its little bitch collection, right? It wants me to put lotion on my skin. Green scares the hell out of me, okay? Because it really does trigger a lot in me of wanting, I want to sit down, I want to play cards with it. I want to do a lot of stuff, right? But let me tell you, if you get an opportunity to set yourself, because you're going to know this is going to happen, right? And this is happening to some of you now. I'm proud of you. Okay, some of you right now, this is happening to. You're getting in short bursts of time. Get in, trade, get out. Get in, trade, get out. You're off to the races. Oh, I just won 5 in a row. I just won 7 and 1. I just did 10 and 2. I just did 7 and 1. You're in for these short bouts compared to where you were in the beginning. Hey, I just did 39 and 2 or 39 and 9 or 67 and 4 or whatever it was, right? I'm just making up numbers now. But the point is that you were in for so much because I asked you to. I asked you to provide data. But were you providing data to me? When I first asked some of you to go in and trade that, do you think I was asking data for me? I'm sorry if I tricked you. No, I wasn't. I wasn't asking for data from me. I was asking data for you. You needed the data yourself. And what data did you collect? What you were doing right, what you were doing wrong, what it felt like to trade those 200 trades, 300 trades. You see, the human mentality will protect itself from several things. One, you hate losing, right? Okay. So you'll begin to find not ways to cheat the system or make it better, but how to gauge your time properly. You'll start to do that. If you trust in the rules and you trust in the strategy, you'll find little things to help you without adding a ton in, right? You don't want to add just well, if I add the MACD and this double stochastic and maybe a Bollinger Band, maybe I'll confirm even better and I'll even make, no. More is not more. More is less. It's going to hurt you. So begin to look at your trading life like you would packing for a long walking trip, right? The more essential things you pack, the more engagement you know of the fundamentals, the basics, how to walk with good sneakers or good boots or what have you, keep dry, the absolute essentials in trading. Looking at the price action, looking at the chart, confirming, even though there's a signal happening, it's an event. That's all it is. It's saying, hey, look at this. Something's about to happen. And you get to decide. You get to help just make that decision of its full direction. Does it have the volume to keep it going? What levels can it retrace at? What levels is it going to? Because you'll begin to spot that too. You'll get that rhythm to the process. And that's another thing you'll find in our network. So if you're brand new here, if you haven't bought in, if you're just starting out or whatever it might be, whatever level you are at, you all start at the very beginning. You'll always be using the price action mentality. You'll always be using the clean chart thought. But one thing that you'll never, 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 never forget from this point on is that lightness that you feel when you look at a chart like that, right? You'll never forget this. You'll never forget looking back on a chart just like this and go, holy crap, I see it. I feel it. I know what it's doing. I know why it does what it does now. I know that these are all just levels of a psychological battle between two sides. And once you get that, once you really feel that, there's just an anticipation you can get with this, a vision of how the market will respond at certain times. And you'll begin to see that with more and more trades as you do. The lessons that we learn here are always about the moment. And if you get an opportunity to get an aha moment, I really do appreciate that. And I hope you got a couple tonight. For all of you that are watching this after the fact, I want to thank you for your time and being here. For those of you that are in the room, stick around. We got questions and answers. We might be doing a couple trades. We might be doing a few things here. Might be looking at a few other things. I think news is still folding. But I got some very crazy news, which I'll talk about off recording here, just with the people that are in the room. Sorry, everybody else, I can't tell you. It's a secret. But everybody else, thank you very much. Mike, thanks a lot for being here tonight. Again, I hope you got some ahas too. I know you were in an aha moment today.
Yes. Thank you, Max. It's always a pleasure.
No worries. All right, everybody else, thank you very much. And as always, trade well. We'll see you next one.